Good afternoon, fellow traders. Welcome to another webinar in the Blue Sky Forex webinar series. I hope you all had a really nice holidays this far and everybody got a lot of presents. Just please write in the question section whether you can properly hear me and see the presentation as well, and then we can continue. Okay, perfect. Thanks for the confirmation. Right. While we let the last people connect to this webinar, let me just quickly go through the disclaimer and then we can kick this off. Contents of this material are provided by third party, not hot forex, and are for informational purposes only and do not constitute investment advice. Hot forex and blue sky forex assume no responsibility for any potential errors, inaccuracies, or omissions in this material. Nothing in this communication contains or should be considered as containing investment advice or an investment recommendation or a solicitation for the purpose of purchase or sale of any financial instrument. Any views or opinions presented within this material are solely those of the author and do not necessarily represent those of Hot Forex unless otherwise specifically stated. Currency trading may not be suitable for all investors as it carries a high degree of risk to your capital. Trading such products is risky and you may lose all of your investment. Past performance is not indicative of future results. Poor fill rates, expiry times, market volatility, and platform errors could result in losing trades. Before deciding to invest in currencies, you should carefully consider your investment objectives, level of experience, and risk appetite. You should be aware of all the risks associated with foreign exchange and currency trading and seek advice from an independent financial advisor if necessary. So with this out of the way, let's take a look at our agenda quickly. First of all, I'll quickly introduce myself. Then we will briefly take a look at the two market types you will come across when performing your daily trading activities. We'll then talk about Fibonacci theory, and then of course how to use the Fibonacci theory to trade FX, and of course stop loss and take profit management. And please hold your questions to the very end of the webinar where I'll be answering them. Just write them down if you receive or get any during the webinar, and then just ask away at the end. So I'm one of the senior traders here in Blue Sky Forex. We are an education, research, and trading group. We do provide 24-hour trade support and analysis just to help the retail traders to make better trading decisions. And Blue Sky Forex is presenting this webinar on behalf of Hot Forex in order to educate you and help you become highly profitable currency traders. So the two market types that you will come across when you're trading is, first of all, price action, aka a trending market, which is more powerful because the trend is your friend. You definitely have heard the expression as well. Identifying a proper trading market usually is a bit more difficult, because if you want to benefit from a trending market, that certain trending move needs to be fueled by some important, significant news or any event happening on the market. Okay. Thus, this means that you need to have some understanding of what events and what news can make the asset prices move. Okay, so you need to have some fundamental understanding of the market. Mean reversion, aka a ranging market, however, is more common. It is definitely easier to identify because during a ranging market, you will see the price bouncing between the nearest support resistance levels and not really moving in any certain direction. It is essentially moving horizontally and is flat. Okay. Depending on what strategy you use, you can certainly benefit from both market types. The Fibonacci retracement is the specific Fibonacci tool that we will be discussing in a bit more detail there are definitely different Fibonacci technical tools available, like Fibonacci arcs, time zones, fans, etc. But we will be focusing on the retracement tool. Okay. And the Fibonacci retracement definitely can be used on a training market. It can also be used on a ranging market, and I will show you how to use that tool inside MetaTrader 4 as well, how to draw it, where to find it, and we'll just scroll through the price history and see if we can find a training market, and also if we can find a ranging market, just to show you both ways how you could incorporate this tool into your daily training. Okay. Before we even get to the Fibonacci, I just want to mention that the Fibonacci retracement tool, it essentially works at the levels that are the retracement levels that are drawn onto the chart. They work essentially like support resistance levels. So understanding how support resistance works is quite essential. No matter what approach you have towards trading, you will still need to incorporate the knowledge of support and resistance levels into your trading, because support resistance levels are followed and considered by all traders, no matter if beginner or professional. So you need to take them into account as well. Thus, they become really effective ways how to read what the price might be doing in the future. Okay. We also have a webinar separately on support resistance levels, so you can fetch the past webinar recordings when you log into your Hot Forex account. Go into the Education Center where you can see the upcoming webinars, and there you will find a link to the past webinar section where you will find all the recordings of different topics and listed there. So I highly recommend going there and taking a look at different topics. You will certainly find something interesting, something that will intrigue you, that you might want to learn or take up. Okay. So what is the Fibonacci theory? Okay. Fibonacci numbers, or the Fibonacci sequence, it's fairly easy to understand. Every next number is the sum of previous two numbers. Okay. Just to just for you to visualize and understand it, we have 1 plus 1 equals 2, right? 1 plus 2 equals 3. 2 plus 3 equals 5. 3 plus 5 equals 8, and so on it goes. So each new number is the sum of previous two numbers. Okay? So this sequence, or this sequence of numbers, was discovered by an Italian mathematician, Leonardo Bonacci, already in the 13th century. However, the origins of this already predate and are traced back to Indian mathematics already. Just Leonardo Bonacci was the one who introduced this to Western mathematics. Okay. The interesting part of this sequence is that it is found all around us. In nature, for example, in bee procreation patterns, different flower patterns, and other biological systems. Now, we as humans, we are also part of nature. We are also biological beings, and our trading decisions and decision-making patterns are also related to the Fibonacci sequence. So that is the reason why you can incorporate these Fibonacci numbers and Fibonacci sequence into analyzing the price moving patterns as well. And it is really, really interesting to see how these Fibonacci retracement patterns really, really effectively, they don't manipulate the price perhaps, but they help to understand what the price could be doing in the future. Okay, it's really interesting, and you will also see that when I actually start drawing some Fibonacci retracement patterns onto the MetaTrader 4. So, as I mentioned earlier, there are different types of Fibonacci tools out there. You can also find several of them in the MetaTrader 4 tool. For example, Fibonacci arcs, fans, time zones. But as I mentioned before as well, we are focusing on the Fibonacci retracements because this is the most popular and perhaps even the easiest to use Fibonacci tool. Okay. So what this tool does, if you draw the Fibonacci retracements onto the chart, it will formulate or display certain horizontal lines on your chart. And these lines, as I mentioned before, can be used and should be used as support resistance levels where the price can retest, retrace after it has made a significant rally or significant drop, for example. Okay, and inside a range, you can also determine what might be the reversal points inside the range where you could benefit from. And of course, this can be used perhaps on a bit of a larger scale chart, for example. Okay. Now, there are different percentage levels in the retracement tool. For example, 23.6, 38.2, 50%, 61.8, and of course, the 100% retracement. 100%, of course, is a complete retracement, meaning a complete reversal of that certain move that you are measuring. Okay. So one of the ways, this is just a theory, and it's only one of the ways how to trade this. We here in our team, we call this the hummingbird formation, right? Because if you also, I'm sorry, not a hummingbird, but a dead cat pounce. Dead cat pounce is one of the formation that effectively uses the Fibonacci retracement tool. There's a chart here as well. I will get to that in a moment, but just a theory beforehand. What the first step you do is you will wait for the price to experience a large drop, meaning more than 100 pips drop during the, well, it's written during the main trading day, but what we mean is during the European session, okay, because we are in the European time zone. So if that certain price drop is driven by news, the better it is, because you will have higher chances of making an effective trade. Now, after this large drop, you will wait until the European session ends and closes. And then you draw the Fibonacci retracement tool from the beginning of the drop, or just the previous higher high, onto the end of the drop. Okay, don't worry, I'll show you that one shortly as well. And while doing that, it will draw different retracement lines onto your chart. Now, after this certain drop, obviously you will see some exhaustion setting in when the London session closes. And more often than not, you will see the price retracing to a certain retracement level. 23.6% is the closest retracement level after the drop. And there are actually a few ways how you can approach this trading setup. And I will now show you how you can approach this setup. You see you have a large drop downwards. Okay. Please note that this time zone, it doesn't actually match up to what we're teaching, because this was taken from a different chart and different time zone. Anyways, you have a large drop during the London session. Okay, you see some exhaustion setting in already. You have some dojings forming, and after the red consecutive candle group, you will see the first green candle with quite large wicks. Okay, that is your hint that it's time to draw the Fibonacci retracement onto the chart. On this example, this Fibonacci retracement is drawn just from the very beginning of the drop, which is fine. Although I am personally more used to drawing the Fibonacci retracement from the previous highest high. So from this point under my cursor would be where I would be drawing my Fibonacci retracement tool from. Okay, and to the very end of the drop. So at the end of this wick is the very lowest low, and this what I would draw the Fibonacci retracement. But if you draw it from the very start of the drop, it's also fine. Whatever suits you best. Now, these numbers on the right side, they do represent the percentage levels of the retracement. So what you can do is, after you've drawn the Fibonacci retracement tool, you see this candle already formed green. So your trade would be to go long and trade towards the first retracement level. You can set your take profit already to the first retracement level, because after you see that the price actually touched this level at least once before, twice before you would actually trade towards it, right? So you see the large wicks already reaching to the very first retracement level. If you jumped in on the trade here, that would have also worked out fine. But just for the appropriate setup, you should definitely wait for at least one, better two candles that hint about the price exhaustion. Okay, on this occasion you see large wicks on both sides and this candle becoming green. So you can trade long here, take profit here, and depending on where exactly you enter the trade, you can set your stop loss at the very lowest low or just a bit below it. Okay, so relatively easy setup, but here is where the Fibonacci retracement tool really shines, because you can pinpoint the take profit and stop loss levels really well. If you have a bit of a higher risk appetite, you can also set your take profit to the next retracement level. But anything already above 50 is getting to the border of it might be becoming a full reversal. Okay, so it's going up. For a call trade, obviously, full reversal would be nice. But after a retracement to the first or second level, if it was fueled by significant news, then usually the price continues in the direction of the trend. So going along somewhere here would not make sense. Okay. So going along here after the first or the second exhaustion candle setting in is the first approach you can carry out. The second approach is trading with the trend. Okay, so you wait until the price has retraced to a certain level and then trade in the direction of the trend, and you go short. So a few things to keep in mind with that approach is that the first retracement level is the riskiest level to go short. Okay, so going short on the second retracement level would be quite optimal, I would say. So after the price reaches this level, or maybe halfway through, you can go short and set your take profit either the lowest low where you ended up drawing your Fibonacci retracement tool, and the stop loss either on the next retracement level or maybe just a bit above that. Okay, so this is what we call also the dead cat bounce formation, and this is how you can this is one of the ways with two different approaches how you can trade the Fibonacci retracement. Okay, now let me go into the MetaTrader 4 and let's observe the current price action and see how the Fibonacci retracement levels have actually served as good support resistance levels for the price in the past. Okay, let me see if you can. Okay, you should be seeing the MetaTrader 4 right now. If you don't see the MetaTrader 4, then please let me know. I will try to unshare it and share it again. Usually fixes it. Right. So what we have here is the Euro USD 1 hour chart, and I usually keep my charts as clean as possible, but just for the example purposes, I've cleared it up completely. So we only have the price here. Okay. Actually, let me just zoom out a bit so you see the general price move here. Okay, let me just show you where you can find the Fibonacci retracement tool. Very first place would be if you have this quick bar or the toolbar open, then the Fibonacci retracement tool is marked with four, I think it is, yeah, it's four dotted lines with an F at the bottom right corner. So this is the Fibonacci retracement tool, okay? The other place where you can find it is Insert. You go down to the Fibonacci category and select retracement. This is the second place where you can find it. Right. So how you would be drawing the Fibonacci retracement tool onto your chart. I will be taking this significant price move here. You see the price peaking out at this point. Let me just mark it out, peaking out at this point, and then essentially, starting its drop and trend downwards and just bottoming out here. Okay, so I will draw the Fibonacci retracement tool just from the previous highest high and dropping it down to the very bottom of that move. Okay, so you see on the right side you have now the retracement percentages: 23.6, 38.2, 50%, 61.8, and 100% retracement. So the 100% retracement level is the level where you started to draw your Fibonacci retracement tool from. Okay, because if the price goes back up to this level, it has retraced already 100% of the move that you were measuring. Okay, so that makes sense this far. Now, as you have, let's say you have already identified that this is the very low it can go and the price has already started to go up. You drew this Fibonacci retracement tool. You see how the price is seeing some, let me just go a bit zooming in, is seeing some, indecision at the very first retracement level, right? And also on the second retracement level, the 38.2 level, you see some exhaustion or indecision. Okay, you have a really large, a candle with a really large wicks on both sides at the same 38.2 retracement level. Okay, so you could have used these levels for any trading opportunities, either these serve like support resistance levels, right? So any characteristics that you will be able to identify with the support resistance levels apply with the Fibonacci retracement levels as well. Okay. Let's take another price move just randomly somewhere. Okay, let's take this range. This is relatively sideways, right? So starting from the beginning of July and ending in the end of July, right? We have August, etc. Okay, so let's take the month of July where the Euro USD was relatively ranging on a 1 hour chart. And what you will want to do is take the Fibonacci retracement, try it from the very top to the very bottom of the range, and see how these levels served as support resistance levels for this price. Okay. So let's say the price is already at this point. You have identified that the price, is quite moving in a range. Maybe you determined it here at some point because the price is building its consecutive peaks at this level here, not going really further than this, bottoming out quite often at this side. So you draw the Fibonacci retracement line, and you can see at every retracement level, the price is seeing some support or resistance. You have a lot of indecision at this point here, for example, at the 50 level percent, just in the very middle. You see quite often the price is bottoming out at the very first retracement level, 23.6%. Okay. And so on. All those levels at this on this example have served as quite good support resistance levels. Okay. Let's see if we drew that the other way around. Of course, you can also add your own custom levels onto the indicator. That's also fine. So I just drew it from bottom to top just to refrain from the need of manually drawing or setting another level here on that side. Okay. But you see the 23.6% retracement level is serving as a really, really good resistance level for the price on 4 occasions. You see how well it bounces the price off again, right? And this is these 3 peaks were formed after me drawing the Fibonacci retracement tool from here to here, right? So using the previous price history, using the previous price movement, the levels that I got have served really well in determining what the price might be doing in the future, right? I'm quite sure everybody agrees with me on that one. Now let's scroll a bit further ahead. Okay, this was our support resist, Fibonacci retracement. Okay. Now let's observe what happened here, for example. The same levels that I drew based on the price action in July, the same levels actually are serving really well in August as well, at the end of August. You see how these levels really repel the price or cause some exhaustion here, occasionally bouncing off, price going up here on the 23.6 level where we had the 3 previous peaks. You see, 3 previous peaks at this point, and the price almost reaching at that point as well. It bounces it right off and stops the upwards trend, upwards movement, right? And same goes for the other levels as well. So Fibonacci retracement tool, really effective. Really should incorporate and practice using it. Incorporate to your everyday trading. Maybe just get one more random example here. Let's see what we can find. Well, let's take this interesting scenario. Okay, you have 2016, November. You had an extreme spike in the price, and it's going to bottom out here before a next significant fast rally upwards. Okay, so we draw the Fibonacci retracement from the peak above to the very lowest low. Okay, let's see what happens here. Okay, that didn't end up well. 1 second. Let's find it again. Okay, here we are. So Euro USD 1 hour chart. At this point, when the price is already going above the previous let's see, just thinking logically, when would you have potentially determined when the low was formed, right? I'm quite sure that would be everyone's question as well. That is by analyzing the previous price fluctuations, in what magnitude it is going up and down, up and down. So you have a significant trend downwards, and you see the price turning into a brief ranging market actually, and then it breaks out the range, right? So if you look at it on a larger scale, after it breaks out the range here, then you can determine that this larger downwards movement has already and definitely ended. Even if you have determined it here already, then you would have almost the same level. Anyways, let's take a look how the price did behave around these levels. Okay, a second. Every time I zoom in, taking back. Okay. Right. The very first retracement level is already at the top of the range, right? So it's the top of range. As soon as it reaches here at this point, it almost reached here, bounced back off, reached on top here again, bounced right off. And this is the moment it broke out. Although you see some indecision here at this point, the third time when it touched it, okay? But this time, the level didn't hold and it broke upwards. Now let's take a look what happens at the next level, 38.2. The price almost reached that level here. You can see, it rejected it quite quickly. When the price came down here at this point, it didn't really reach it, but almost bounced off of it once more, went to the 38.2 retracement level, and you can see that you have an extreme wiki candle here before a significant movement downwards, right? So those two levels played a really, really important role of the future price movements after we had already determined and drawn it onto the chart, okay? So you see these levels, two of them played a really important role. Let's take a look what happened in the future. Again, the nearest two levels, 23.6% and 38.2% level again played a relatively important role as support resistance in February 2017. When the price reached at this 38.2 level, it bounced right off and didn't really go any further when it reached the third time either. Okay. So I think these two examples on a trading market gave you a relatively good visual idea of how effective the Fibonacci retracement tool is to provide you with those retracement levels which really effectively serve as support resistance levels for the future price movement. Okay. So all you have to do is understand support resistance levels. It's not too difficult. You just have to experience and practice, because not always the price behaves the same way in near a support resistance level. Okay, you always have to understand where the price came from, what is the asset you are trading, what is the time of day you are observing it, and all those small bits and pieces need to be taken into account when trading based or making trading decisions based on those support resistance levels, which are provided to you by the Fibonacci retracement tool. Okay. So that is it for today. Just kept it short and sweet. Let me just take up the questions now. One moment, please. Okay, I see a question. Can we use it with Fibonacci indicator? I think you mean Fibonacci candles then. Or Fibonacci indicator. Sure, of course. You can always use Fibonacci retracement tool, right? Because these retracement levels, they do provide you with those really good support resistance levels. Just helps you really draw them onto the chart for you as well. You can always use this with any trading strategy or method that you want. Raja Murali is asking, will you be mailing the presentation to me? Sorry, the presentation material itself is not being sent outwards. You can, however, find the past webinar recordings in the education section. Just hit the link, go past webinars, and you will find all the material and all the presentations and the recordings there. Fabio is asking a good question. Is it possible to use the Fibonacci within a bullish trend? Yes, of course. It works exactly the same way, but just in reverse. Okay, it works exactly the same way. Muhammad is asking, do you recommend some other indicator with Fibonacci retracements? Well, Fibonacci retracement is on its own such an effective and such a good technical indicator that you don't really need any other indicators to accompany it. But if you really, really want, and if you really need to incorporate any other indicators with it, then you can always use any overbought, oversold indicators like the RSI, stochastics, just to see if on a lower scale the price might be overbought or oversold near a certain retracement level, just to help you make a trading decision perhaps more accurately. Dr. Christopher is asking, which time frame works best with Fibonacci? Truth be told, Fibonacci can be used on any chart time frame effectively. However, you need to understand the general fact that the lower the time frame of the chart, the more noise you will visually see on it. Okay, and the more price noise you see, the more movement noise you see, the more false signals you will have. So I would say if you use a 1 hour chart time frame, which is personally my favorite with most of my training approaches, then it's completely okay. You can go down to 30-minute, 15-minute charts, even 5-minute charts. 1-minute charts is something I have always avoided because it contains too much noise, and I believe it's a waste of time. 5-minute charts minimum, 1 hour charts optimal. And of course, if you want to analyze the grander scale of things or of what this certain price or the certain asset is doing, then you can just zoom out to 4-hour charts, daily charts, and just take it from there. It does, the higher you go, the less noise you have and the more effective usually the technical indicators will become. Onissimo is asking, can Fibonacci be used with news? Certainly, but now depending on what formation you will use. The formation that I showed you earlier, this one that you see on the chart right now, this is the dead cat bounce, and this usually is driven by news. When the drop is driven by news, then you have higher chances of it bouncing and retracing to the first or second retracement level after the European session closes. Okay, so yes, it can be traded with news. It just depends on how you use it. Okay, Akin Tunda is asking, how far back do you have to go to get the high of the price, I guess, to draw the Fibonacci retracement tool? Now that depends if I am really observing a trending market or if I am observing a ranging market. Now, if I am observing a trending market, then I will start drawing the Fibonacci retracement tool from the previous higher high. On this occasion, as you see under my cursor, the red candle with the wick on the top side almost reaching to the Bollinger Bands. Okay, that would be my starting point because this is the highest high, and just draw the Fibonacci retracement to the very low point. Okay, when you see already some exhaustion setting in, wicks coming on both sides of the candles, maybe some dojis or shooting stars here, doesn't matter. And then you can draw your Fibonacci. Raja Murali is the dead cat bounce. Dead cat bounce is the name of the formation. Lionel is saying, I use Fibonacci with stochastics on 1 hour and 4-hour chart timeframes. it has improved my trading performance. Certainly, thanks for the input. So we already, you see from the community here on this webinar that the Fibonacci retracement tool, it is actually actively used among expert traders, among advanced traders, also among beginner traders. This was not the very first technical indicator that I came across and started to practice and use, but it was one of the first ones because it is so widely used, and is simply it's easy to understand. It's easy to read if you just get into this a bit, and it is really effective. Okay, I have a statement here that it is similar to ABCD strategy. Well, I wouldn't say that you can really draw any equal signs between using Fibonacci retracement tool and harmonic patterns. But if you think of it in a way, it would be a really simplistic version of ABCD harmonic pattern, but harmonic patterns actually are really precise. Okay, so I wouldn't really draw any comparisons between them. Akane is asking, can it be used to determine the entry point of the trade? Of course, all trades definitely have an entry point and an exit point, right? And if you use the Fibonacci retracement tool, then it will help you make a trade and it will help you determine the entry point of the trade as well. Of course, it depends on how you use it. If you're looking at this dead cat bounce formation, then you don't really have a specific entry point, and the Fibonacci retracement tool doesn't really give you information about where you should enter the trade. However, it gives you a clear visual of where you should aim your trade to end. Okay. Now, depending on where you enter, of course, you will get a result accordingly, right? With this formation specifically, you can just observe the candles that are hinting about an exhaustion and potential reversal, and then maybe wait for example, on this very example, if you waited for this candle to close green and then start trading on the beginning of the next candle towards the first retracement level, that would have been fine. If you use the Fibonacci retracement tool on a ranging market, however, then you can wait for the price to reach a certain retracement level, and of course analyze it properly, and based on the previous price action, see if it would potentially bounce off of it, and if so, then you can just use that retracement level as the entry point and trade towards the next retracement level and set your take profit there, just as a very easy example. Onissimo is asking, so we should target the wicks as the high and low points when drawing the Fibonacci retracement? Yes, that's correct. Another question, I am using it with Fibonacci extension. Will it work? Well, it completely boils down to how you use it. It may work, it may not work. It depends on your approach and your strategy. Ofyung is saying, I see Fibonacci arcs. How do you use them? Well, this webinar is specifically focused on Fibonacci retracement levels because these are the easiest to pick up, I would say. Maybe we'll make another webinar in the future for Fibonacci arcs as well. It's just something to put on the table perhaps, but not this time. Michael, the recordings of all past webinars can be found on the past webinar section. Just log into your Hot Forex account, find the education section, and there you can hit a link to past webinars. You will find all the recordings there. Okay, last call for questions. Okay, excellent. Seems that there are no further questions coming in. So thank you for attending this webinar today. It has been my pleasure being the host. I sincerely hope you had a good holiday period. I hope you will have a great New Year's Eve and at the best ever New Year as well, because we will be seeing you already in 2019. Next Thursday, we will not be having webinar. It's the 3rd of January, but the week after that, we'll already be coming back with another topic. So again, thanks everybody. As always, trade safe and take care. All the best.